CK Hutchison's risky port ventures, an unconsulted decision that sparks political backlash in China. Date, March 14, 2025. Summary. CK Hutchison's recent decision to divest its port assets for $22.8 billion has ignited significant political backlash in China. The sale, which involves key port facilities such as the Port of Felixstowe in the UK, has faced fierce criticism from Chinese state media and raised concerns among stakeholders regarding national interests and security. This report outlines the key events surrounding this controversial decision, its immediate repercussions, and the broader implications for foreign investment in China. Key events. 1. Announcement of sale March 2025. CK Hutchison officially announced the sale of its port assets, citing a strategic shift to focus on core businesses and the need to reduce debt. The company claimed that this divestment would bolster its financial health and allow for reinvestment in more promising ventures. 2. Immediate backlash. Almost immediately after the announcement, Chinese state-backed media erupted in criticism, labeling the decision a betrayal of national interests. Editorials expressed concern that the divestment undermined China's strategic control over essential infrastructure, reflecting a growing sentiment against foreign entities controlling critical assets. 3. Market reaction. Following the backlash, CK Hutchison's stock experienced a notable decline, signaling investor concerns regarding both the sale and the political ramifications in China. The drop in share value underscored the risks associated with political perceptions surrounding foreign investments in sensitive sectors. 4. Responses from stakeholders. Industry experts and analysts commented on the fallout from the sale, emphasizing the necessity for multinational companies to engage in consultations with relevant political entities in China before making significant business decisions. Critics noted that the lack of prior dialogue had exacerbated tensions and led to a miscalculation by CK Hutchison. 5. Comparative reactions. While the immediate backlash from state media and public sentiment was pronounced, there were broader implications for foreign investment in China's port sector. Concerns were raised that the sale could deter future investments from foreign entities who might fear similar political repercussions. 6. Future considerations. Analysts warned that CK Hutchison must navigate a complex landscape moving forward, balancing its business strategies with the geopolitical realities of operating within China. The backlash signifies a potential shift in how multinational companies approach asset sales, particularly in crucial infrastructure sectors. Detailed analysis. The decision by CK Hutchison to sell its port assets can be viewed through multiple lenses, examining not only the immediate financial implications but also the broader geopolitical context. Financial implications. From a financial perspective, CK Hutchison's decision to divest was likely influenced by the need to streamline operations and reduce an existing debt burden. The company's leadership may have calculated that the cash influx from the $22.8 billion sale would allow for greater flexibility in core business areas, potentially leading to improved financial metrics in the long run. However, the rapid decline in share prices following the announcement suggests that investors are wary of the dual risks associated with the sale: the immediate financial gains versus potential long-term strategic losses. This apprehension is amplified in the context of increasing scrutiny of foreign investments in China's infrastructure. Political and social context. The political backlash, particularly from state media, cannot be overlooked. The portrayal of the sale as a betrayal resonates deeply within the broader narrative of national sovereignty and security in China. The Chinese government has historically been sensitive to any perceived loss of control over strategic assets, especially in sectors that are critical to national infrastructure and economic security. The notion that foreign entities, especially Western firms like BlackRock, could gain control over vital port facilities has triggered fears of dependency and loss of sovereignty. This sentiment is exacerbated by the current geopolitical climate characterized by rising tensions between China and Western nations. Stakeholder perspectives. Stakeholders from various sectors have voiced concerns regarding the implications of the sale. Industry experts have stressed the necessity for companies like CK Hutchison to engage in open dialogues with Chinese authorities before making major decisions. This lack of consultation was highlighted as a strategic misstep, suggesting that multinational corporations must be acutely aware of local sentiments and political landscapes to avoid backlash. Furthermore, the reactions from stakeholders indicate a growing unease about the future of foreign investment in China. The fear that similar actions could lead to political repercussions may deter potential investors from entering or expanding in the market, thereby impacting overall economic growth and foreign relations. Future outlook. Looking ahead, CK Hutchison faces a challenging path. The company must not only address its financial objectives but also navigate the increasingly complex geopolitical environment. The backlash serves as a cautionary tale for multinational corporations, signaling the importance of integrating local political dynamics into corporate strategy. Moreover, this incident may inspire other companies to adopt a more cautious approach to foreign investments in China, emphasizing the need for thorough risk assessments and stakeholder engagement. The evolving landscape suggests that future divestments in sensitive sectors will require a nuanced understanding of local politics and public sentiment to mitigate backlash and ensure smoother transactions. Conclusion. CK Hutchison's decision to sell its port assets has ignited significant political backlash in China, characterized by strong criticism from state media and a negative market response. The incident underscores the intricate relationship between corporate actions and political dynamics in an interconnected global economy. As the company navigates the fallout from this controversial decision, the broader implications for foreign investment in China's infrastructure become increasingly apparent, highlighting the need for greater awareness and engagement in future corporate decision-making. Sources: 1. Reuters. CK Hutchison shares drop after China posts critical commentary on port sales. / www.reuters.com/business/CK Hutchison shares drop after China posts critical commentary. Port sales 2025-03-14/. 2. World Cargo News. Hutchison's port sale faces backlash in China. / www.worldcargonews.com/business/2025/03/ Hutchison's port sale faces backlash in China. 3. Port Technology. CK Hutchison faces backlash over U.S. port sales. / www.porttechnology.org/news/CK Hutchison faces backlash over US port sale. CK Hutchison's decision to sell its port assets for $22.8 billion has sparked significant political backlash in China, leading to widespread criticism from state media and raising concerns among various stakeholders. This controversial move includes the sale of strategic port facilities such as the Port of Felixstowe in the UK to a consortium led by BlackRock. The announcement of the sale in early March 2025 cited the need for CK Hutchison to concentrate on its core businesses and reduce debt as key reasons for the divestment. The company expressed optimism about the potential financial benefits of the deal. However, the immediate backlash from Chinese state-backed media labeled the decision a betrayal, suggesting it undermines China's interests. This reaction reflects deeper concerns about foreign control over vital infrastructure assets and implications for national security and sovereignty. Following the announcement, CK Hutchison shares experienced a notable decline, indicating negative investor sentiment regarding the sale and its associated controversy. The market's reaction underscores the risks tied to political and public perceptions in China concerning foreign investments. Stakeholders, including industry experts and analysts, have weighed in on the implications of the sale. Critics argue that such decisions should involve consultations with relevant political entities in China to prevent backlash. The lack of dialogue prior to the announcement has been seen as a significant misstep, exacerbating tensions and raising alarms about future foreign investments in China's port sector. While the immediate backlash from Chinese media and public sentiment is evident, broader implications for foreign investment in the port sector are also a concern. Analysts warn that CK Hutchison may need to navigate a complex landscape moving forward, balancing its business strategies with geopolitical realities in China. The backlash could signify a shift in how multinational companies approach major asset sales, particularly in sensitive sectors like transportation and logistics. In summary, CK Hutchison's port asset sale has triggered substantial political backlash in China, marked by strong criticism from state media and unfavorable market reactions. The timing of the announcement coincided with rising tensions surrounding foreign investments in infrastructure, emphasizing the necessity for greater consultations and awareness of local sentiments in future corporate decision-making. This controversy highlights the intricate relationship between business operations and political dynamics in an increasingly interconnected global economy. CK Hutchison's decision to divest its port assets has sparked significant political backlash in China, an aspect that many observers may overlook amid the broader implications for foreign investment and corporate strategy. While the sale itself, valued at $22.8 billion and including crucial facilities like the Port of Felixstowe, has garnered attention, the nuances of the political reaction and its potential fallout are equally significant. Important content that may be overlooked. 1. Political and national security concerns. The immediate backlash from Chinese state media labeling the sale a betrayal underscores deep-rooted anxieties regarding national security and sovereignty. This reaction may be dismissed as mere rhetoric, but it reflects a heightened sensitivity to foreign control over strategic infrastructure. The significance lies in the fact that these sentiments resonate with broader nationalistic trends in China, where foreign investments are increasingly scrutinized through a lens of security. Understanding this context is crucial for multinational corporations operating in China. 2. Lack of consultation. The criticism regarding CK Hutchison's failure to consult with relevant political entities in China prior to the decision is particularly noteworthy. This oversight has not only escalated tensions but also serves as a cautionary tale for other companies. In an environment where government relations can significantly influence business outcomes, the absence of dialogue suggests a disconnect between corporate strategy and the geopolitical realities of operating in China. This misstep highlights the importance of engaging with local stakeholders to mitigate backlash and foster smoother operational pathways. 3. Market reaction and investor sentiment. The notable drop in CK Hutchison shares following the backlash is indicative of the market's sensitivity to political sentiment. Investors are acutely aware that foreign entities are often at the mercy of public perception and government policy in China. The significant market reaction could deter future investments from both local and foreign investors who fear similar repercussions. This potential shift in investor sentiment may not be immediately apparent but could have lasting implications for the attractiveness of the Chinese market for foreign capital. 4. Implications for future foreign investments. Analysts warn that this incident may deter future foreign investments in China's port sector, as companies reassess the risks associated with political backlash. The broader implications of CK Hutchison's decision extend beyond its immediate financial results, as it may instill a climate of caution among foreign investors. The fear of political repercussions could lead to a pullback from engaging in strategic sectors, thereby impacting China's economic openness and foreign investment inflow. 5. Strategic asset control. The sale of key port facilities raises questions about control over strategic assets in a critical sector. The backlash reflects a concern among Chinese authorities and the public about losing control over infrastructure that is vital for national logistics and trade. This sentiment may not only affect CK Hutchison but could also raise alarms for other foreign companies operating in similar domains, prompting them to reconsider their asset management strategies in China. 6. Geopolitical landscape. The timing of the announcement amid rising geopolitical tensions is also significant. As global dynamics shift and nations become more protective of their strategic assets, CK Hutchison's decision serves as a case study in how corporate actions can reverberate within the geopolitical landscape. Companies need to be increasingly aware of the interplay between their business strategies and the political climate, especially in regions with a history of government intervention in economic matters. Conclusion: the backlash against CK Hutchison's port sale is not just a momentary reaction, it encapsulates a complex interplay of corporate strategy, national security concerns, and investor sentiment. The nuances of this situation, particularly the lack of consultation with local authorities, the implications for future foreign investments, and the broader geopolitical context, are critical for understanding the evolving landscape of international business in China. As companies navigate this intricate environment, the need for sensitivity to local political dynamics will be paramount in ensuring sustainable operations and minimizing backlash. 1. Political backlash and national security concerns. The sale of CK Hutchison's port assets has triggered a significant backlash from Chinese state media, which has framed the decision as a betrayal of national interests. This criticism underscores the broader concerns regarding foreign control over strategic infrastructure in China, particularly in the context of rising nationalism and heightened sensitivity to foreign investments that may threaten national security. The narrative suggests that such sales could undermine China's economic sovereignty and provoke resistance against foreign entities operating within critical sectors. 2. Investor reactions and market dynamics. The immediate market reaction to the announcement was negative, with CK Hutchison's shares experiencing a notable drop. This reflects how investor sentiment can be heavily influenced by political perceptions, especially in a market like China where state media plays a crucial role in shaping public opinion. The backlash not only raises questions about the financial health of CK Hutchison post-sale but also highlights the risks associated with political dynamics in foreign investment, particularly in sectors tied to national infrastructure. 3. Lack of consultation and strategic missteps. Analysts have pointed out that CK Hutchison's failure to engage in prior consultations with Chinese political entities before announcing the sale may have been a critical misstep. This lack of dialogue has exacerbated tensions and highlighted the importance of understanding local political landscapes in multinational business operations. The situation serves as a cautionary tale for other companies considering similar transactions, suggesting that failure to account for political sensitivities can lead to significant backlash and operational challenges. For future implications for foreign investment, the controversy surrounding the port sale may have long-lasting implications for foreign investment in China's port sector. Stakeholders are concerned that such political backlash could deter future investments from foreign entities, as potential investors may fear similar repercussions. The incident reveals the necessity for multinational corporations to navigate the complexities of geopolitical realities, particularly in sensitive industries, and emphasizes the need for greater awareness of local sentiments in decision-making processes. This situation may lead to a paradigm shift in how multinational companies approach asset sales in politically sensitive areas. 1. The sale of Hong Kong's Airport Authority 1997. In the run-up to Hong Kong's handover from British to Chinese rule, the decision to privatize and sell shares of the Airport Authority sparked significant political backlash. The move was seen by some as a relinquishment of control over critical infrastructure, leading to concerns about the implications for national sovereignty and economic stability. The controversy highlighted the tension between the need for foreign investment and the desire to maintain local control over strategic assets. 2. The Dubai Ports World controversy 2006. When Dubai Ports World, a state-owned company, sought to acquire the operations of 6 major U.S. ports, it faced intense political backlash in the United States. Critics, including lawmakers from both parties, raised concerns about national security and foreign control over critical infrastructure. The backlash was so severe that the company eventually agreed to divest its operations in the U.S., underscoring the political sensitivities surrounding foreign investments in national infrastructure. 3. The sale of British Steel to the Chinese 2016. The acquisition of British Steel by a Chinese firm led to significant scrutiny and political criticism in the UK. Concerns were raised about the implications for local jobs and the potential for asset stripping, as well as the broader impact on national interests. The backlash was fueled by fears that foreign ownership could jeopardize the future of a strategic industry in the UK, mirroring sentiments seen in CK Hutchison's recent port asset sale in China. CK Hutchison's recent decision to divest its port assets has sparked significant political backlash in China, raising critical questions about the future of foreign investment in the region. As we look forward, several predictions can be made regarding the implications of this situation on CK Hutchison, the broader investment climate in China, and international business dynamics. Predictions and future outlook. 1. Increased scrutiny on foreign investments. The backlash against CK Hutchison's sale will likely lead to heightened scrutiny of foreign investments in China's critical infrastructure sectors. Policymakers may impose stricter regulations and review processes for foreign transactions to protect national interests, which could deter potential foreign investors who fear political repercussions. 2. Shift in corporate strategy. CK Hutchison may need to reassess its global strategy, particularly concerning its operations in China. Future corporate decisions may involve deeper consultations with local stakeholders and political entities to mitigate backlash. This could lead to a more cautious approach in pursuing asset sales for acquisitions in politically sensitive areas. 3. Impact on shareholder confidence. The negative market reaction and drop in CK Hutchison shares indicate a potential erosion of shareholder confidence. In the future, the company may need to implement robust communication strategies to reassure investors and counteract fears of instability stemming from political controversies. 4. Geopolitical tensions as a business factor. Multinational corporations will increasingly have to navigate geopolitical tensions as a fundamental aspect of their operations. The CK Hutchison incident highlights the interconnectedness of business decisions and political realities, compelling companies to factor in international relations when making strategic choices. 5. Potential for increased nationalism. The backlash could fuel nationalist sentiments within China, leading to a more protective stance over domestic industries and infrastructure. Companies operating in China may find themselves facing greater public scrutiny and calls for local ownership in sensitive sectors, which could reshape the landscape of foreign investment. 6. Long-term implications for the port sector. CK Hutchison's port assets, particularly those in strategic locations, may become focal points for national security discussions in China. The company's decision to sell could set a precedent, leading to future asset sales being viewed through a lens of suspicion and potential backlash, ultimately affecting the operational landscape in the global port industry. 7. Evolving investment strategies. Investors may begin to favor companies that demonstrate a commitment to engaging with local stakeholders and understanding regional sensitivities. As a result, companies that prioritize transparent communication and consultation may find themselves more successful in navigating similar situations. 8. Emergence of new market players. The fallout from the CK Hutchison sale may create opportunities for local companies or state-owned enterprises in China to acquire the assets or fill the void left by foreign companies. This could lead to a realignment of market players in key sectors, reshaping competitive dynamics. 9. Focus on strategic partnerships. Moving forward, multinational companies may seek to establish strategic partnerships with local firms to enhance their operational legitimacy in China. Collaborations could allow for shared risk and greater acceptance within the local market, particularly in sensitive sectors. 10. Global investment climate changes. The CK Hutchison case may serve as a bellwether for broader trends in global investment climates where political considerations increasingly influence business decisions. Companies worldwide may face a growing need to assess geopolitical risks as integral to their strategic planning processes. In conclusion, CK Hutchison's decision to divest its port assets has far-reaching implications not only for the company itself but also for the future of foreign investment in China. As political backlash unfolds, the landscape for multinational companies operating in sensitive sectors will likely shift, necessitating a more nuanced approach to decision-making that takes into account the intricate interplay between business and politics in an interconnected global economy.